Imagine being the world's largest landlord, controlling hundreds of billions of dollars in real estate, but not actually owning most of the buildings yourself. That's exactly what Blackstone and real estate investment trusts, REITs, have mastered. Instead of traditional ownership, they've created a system where they dominate global real estate without bearing the direct risks of ownership like the average landlord. But how does this work? How does Blackstone make billions without directly owning most of the properties it profits from? And what does it mean for the future of housing and commercial real estate? The story begins in the 1990s when Blackstone, a private equity firm founded by Steven Schwartzman and Peter Peterson, saw an opportunity in real estate. While most investors looked at individual buildings or development projects, Blackstone had a different vision. Instead of owning properties outright, they would use their capital to buy controlling stakes in companies and real estate portfolios, flipping them for a profit. This allowed them to influence the market at a massive scale without taking on the full burden of property management. One of the biggest moves in this strategy was Blackstone's investment in real estate investment trusts, or REITs. A REIT is essentially a company that owns and manages a portfolio of real estate properties, such as office buildings, shopping malls, apartments, and even industrial warehouses. Investors can buy shares of these REITs, allowing them to profit from real estate without actually owning any physical property. This structure gives Blackstone an enormous advantage because it lets them control vast amounts of real estate through financial instruments rather than direct ownership. To understand how Blackstone dominates the real estate market, let's break down their business model. First, Blackstone raises capital from institutional investors, pension funds, sovereign wealth funds, and ultra-wealthy individuals who are looking for stable returns. Then, instead of buying and managing properties directly, Blackstone strategically acquires entire REITs or stakes in them, giving them indirect control over thousands of properties. Because they operate at such a massive scale, they can negotiate better deals, cut costs, and maximize profits in ways that smaller landlords simply can't. A prime example of this strategy was Blackstone's acquisition of equity office properties in 2007 for $39 billion. At the time, it was the largest leverage buyout in history, but instead of holding on to the properties, Blackstone quickly sold off many of the buildings at a profit, effectively acting as a middleman rather than a long-term owner. This playbook repeated itself over the years, with Blackstone flipping apartment complexes, warehouses, and office spaces for billions in profits. But the real power of Blackstone isn't just in flipping properties, it's in their ability to reshape entire real estate markets. Take the rental housing market, for example. After the 2008 financial crisis, millions of foreclosed homes flooded the market. Traditional homeowners were struggling, but Blackstone saw an opportunity. They created Invitation Homes, a company that bought up tens of thousands of single-family homes and turned them into rentals. By leveraging Wall Street capital, they were able to outbid regular home buyers, consolidate properties, and create a rental empire, all without technically being a traditional landlord. This trend extends beyond housing. In recent years, Blackstone has been aggressively expanding into industrial real estate, particularly warehouses and logistics centers. The rise of e-commerce has made these properties extremely valuable, and Blackstone has capitalized on this by acquiring massive portfolios of warehouses rented out to companies like Amazon and FedEx. Again, they don't necessarily manage these properties themselves. They use their financial leverage and strategic acquisitions to dominate the market. The same strategy applies to commercial real estate, where Blackstone has interests in shopping centers, hotels, and even data centers. They don't need to own every individual building outright. By controlling the capital behind the properties, they exert influence over market trends, rental prices, and even urban development policies. This level of control is why Blackstone is often called the world's largest landlord. even though they technically don't own most of their properties in the traditional sense. The REIT structure plays a crucial role in this dominance. Because REITs are publicly traded, Blackstone can invest in them, take them private, restructure their holdings, and then either sell them off or take them public again at a higher valuation. This allows Blackstone to cycle through billions of dollars in real estate assets without ever being stuck in long-term property ownership. But what does this mean for ordinary people? On one hand, Blackstone's model brings efficiency and liquidity to the real estate market, allowing for large-scale investments and the development of high-end properties. On the other hand, their aggressive buying tactics can drive up property prices, making it harder for average home buyers to compete. In many cities, Blackstone-backed companies have been criticized for increasing rents and reducing affordability, leading to debates about the impact of financialized real estate on everyday people. Looking ahead, Blackstone and similar firms are not slowing down. With the rise of AI, smart buildings, and the growing importance of data centers, the next frontier for real estate investment is digital infrastructure. Blackstone has already started acquiring data centers and cloud storage facilities, positioning itself as a key player in the future of real estate. So, what can we learn from this? Blackstone's dominance shows that in today's economy, controlling real estate doesn't necessarily mean owning buildings. It means controlling the capital that funds them. By leveraging financial instruments like REITs and private equity funds, firms like Blackstone have rewritten the rules of the real estate industry, turning what was once a local business into a global empire. And as cities continue to evolve and the real estate market shifts, one thing is certain. The largest landlords of the future may own even fewer buildings than they do today. If you enjoyed this video, don't forget to like and subscribe for more fascinating business stories.